Well, it's been an interesting week. Gold is still hovering near record highs as traders bet the Federal Reserve could move on rates in September as the dollar softens. Trade tensions are bubbling again. China's steep new duties on Canadian canola rattled prairie exporters and reminded everyone how quickly commodity flows can be weaponized. And copper's back in the spotlight too. Chile State forecaster capped its outlook at $4.30 a pound. Plenty to unpack on what this means for miners and investors. So let's bring in Nikos Tzabouras, Senior Market Analyst at Tradu. Nikos, thanks very much indeed for talking to us.
Thank you, Devan.
So I thought let's start with this week's inflation figures in the United States. I mean, they came in softer than forecast, Nikos, pushing spot gold back above $3,350 and then strengthening bets on a September rate cut. Now, my question is, do you think the market's pricing in is pricing ahead of the Fed's own timeline, or could that set gold up for a pullback? What's your take?
Well, I would say that expectations for aggressive easing by the Fed is definitely high at this point. Personally, I'm still not totally convinced on the justification for such aggressive easing, but that's definitely where markets are. And that's a good situation for non-yielding assets like gold, and at the same time exacerbating that gold strength is that this is bad for the greenback, right? Which is also weighed by lingering concerns over the Fed's independence and, of course, the ballooning debt, which could come back in the spotlight. So the way things are, I think that's a good environment for gold in their interest rates aspect, but there could be room for repricing, and that could set up gold for pullbacks if we see those expectations coming down.
We also saw gold spike on fears over U.S. tariffs on Swiss bullion, then ease when the exemption was confirmed. I mean, for you, did that episode expose any structural weakness in gold's physical supply chain, or was it purely a sentiment-driven move?
I think it did underscore fragility in gold supply chains. But I think more than anything, it shows the sort of difficult environment of the trade of the tariffs and their implementation. President Trump clarified that gold bars will not be tariffed, and with that, I think markets can leave that behind them. I see as a non-factor at this point. We had the scary over.
Yeah, if I can come in there, Nikos. Interesting developments on the copper front, right? You got this miner in Chile, Antofagasta, just reporting a nearly 60% jump in half-year earnings on stronger copper prices and production. Does this signal that transition-driven demand is finally feeding through to miners' bottom lines? And what does it mean for North American producers watching this from the sidelines?
Well, I think that copper faces significant structural demand drivers, most notably clean tech, chips, anything that has to do with semiconductors, data centers, and AI, and defense sector. We see defense budget going up everywhere, NATO, United States, Europe. So all these offer structural demand drivers. As a result, copper miners are set to benefit from that, and US copper miners perhaps even more so, given also the additional tariffs and the push by President Trump to boost self-reliance.
Given the volatility in metals this week, I mean, what are you seeing in investor behavior? Are institutions taking profits, doubling down, or hedging more aggressively?
It's hard for me to comment on that, but I imagine that some hedging probably goes on. We also saw in the United States a huge buying spree ahead of the tariffs. Now the tariffs have been implemented, that's probably going to taper off. So it will be interesting to see how this plays off, but definitely volatility is here to stay, given tariffs not only on copper, but broader tariffs that can hurt the economy and other factors as well, such as demand that we discussed about.
Nikos, something interesting this week was that the U.S. announcing a nearly $1 billion package to boost domestic critical minerals capacity. I mean, that was interesting for me. In the context of rising trade frictions, how significant is this move for supply security for mining companies operating in North America?
Huge importance. That's for sure. President Trump wants to boost self-reliance on critical minerals, rare earth metals. So that's definitely a significant investment. However, that doesn't mean that the United States can just stop importing. They will still need to import. Some of that investment has to do with recycling, which can scale up relatively faster. But beyond that, ramping up production will need time, and there are various hurdles like costs, planning, environmental concerns, that kind of things that can slow the process, although the Trump administration is definitely pushing to change these things.
And just to push further on that point, it's interesting you mentioned that imports simply can't stop. I mean, this isn't an overnight thing, and that perhaps sets the tone for our people who are watching this, the fact that imports will continue undoubtedly.
Definitely. There's no way around it. Copper and other critical minerals and rare earths like magnets are hugely important for the world as a whole and for the United States, and they just can't build self-sufficiency fast.
And then as I let you go, Nikos, big developments that you perhaps have your eye on over the next few days. What are you watching? What are you looking at?
Interesting. Let's stick with in this month. We definitely do have NVIDIA earnings later this month. Why that is important is that it's going to offer an update on chip demand, huge for copper and other metals, and also the Jackson Hole Symposium, where we're going to hear from Fed Chair Powell. If he were to stick to his cautious approach, that could be a boost for the dollar and have the relevant implication on metals like gold. Or if he will jump, let's say, on the easing bandwagon, which would further pressure the dollar.
Well, we'll leave it there. As always, thanks very much indeed for your time, Nikos Tzabouras, the Senior Market Analyst at Tradu. Nikos, thanks indeed for talking to us.
Thank you very much.